Good morning, everyone. Welcome to the Euro Trader. I'm your host, Marcus Stalker D. So Bruno has already posted the risk disclaimer, I think. Has he posted? Have we not posted? Oh my god, I'm getting ahead of myself here. So Bruno will post the risk disclaimer, so make sure you are familiarizing yourself with that. I am seriously qualified, but obviously not a CTA, so everything you see here today is for educational purposes only. Now, before we get into it, so as you guys know, we are getting into towards the end of the year, and the old legacy accounts are going away. Now, my live account was on the old legacy dashboard, so obviously to switch, we have to switch, right? So I have to redo some of the XFAs and everything to switch everything to the new legacy dashboard, to the new dashboard rather than the legacy one, because the legacy dashboard is going away. Likewise, if you have any XFAs waiting in the wings, I think they're going to be just killing all of those towards the end of the year. So yeah, I would advise that you switch as well. But as a result, I have to go through the whole song and dance again. So I do have one XFA that I literally went, like one of those combines that I was doing, it went over the hump. So I was able to activate it. And now I'm working on a couple of others. I picked up some of these new no activation accounts. And so we're going to keep going and switch everything to the new dashboard. Everything's much easier over there as well. Because the payouts are instantly deducted. Before you would have to wait for like a day or so, and even though the payouts were still very quick, it was all just taking 2-3 days sometimes, and then if you would catch a weekend, it could even take like 5 working days. So all of that needs to be done into the new year. With the XFA, I don't know what they're going to do with the old XFAs, right? But, with, you should have gotten an email, because I got an email about my live account that, by the end of the year, we'll kind of tell you what to do. And I'm like, well, if we're going to be doing everything all over again, like, what is the point? So I just made a decision to go back to the XFA stage and just transfer everything over. But yeah, so I don't know what they're going to do if the XFAs are still active and you're on the old dashboard. I can imagine that they're just going to be closed, or, you can withdraw some cash from it and, again, start everything again. What's my plan for Christmas? We have my sister-in-law coming over, and it's just going to be a very quiet one for us. I've got 8 dogs, so it's very difficult to go anywhere with them. And I don't like being away from them either. I'm a very, quiet life kind of person. Alright, so let's have a look at the silver. It is kind of... it's not showing. Hold on. Yeah, it's weird, because I saw it and then it disappeared. You're right. You're right, Bruno. It's not showing. I don't know why. We may need to ask someone why. How is MGC doing? MGC is bleeding, so silver is kind of correlating with that, but it's not super crazy. So the way I'm seeing gold moves, and silver as well, is that this is unwinding into the end of the year, right? So if we go to the weekly chart, we're still kind of consolidating here, and silver is doing the same thing. Now for me, break of the Asia low would be an interesting one, and this one was done, I was awake last night. I don't know why. Well, I know why, because one of my dogs was he's okay, he's doing okay, but we're kind of feeding him through the night, and we were awake. So I looked at the charts and I noticed the Shanghai exchange did the classic run over the lows that were there at the time and then start reversing. So I grabbed a little long from around here up to about just sub 58. So it was not the longest trade in the world because I went to sleep right after that. But I do expect some unwinding moves to be happening into this period, especially 2 weeks into the December. Because this is the time when typically institutions have to take profits, right? They have to book some profits and they have to, you know, pay people bonuses. So what does that mean for us? It means that you will probably see some shorts stepping in. What I'm seeing on silver is that some of these calls that we had at 58 last night, they are effectively now about to expire worthless, right? So we have options on Mondays on silver and we also have them on Fridays. So the next option expiry is Friday. And everybody was long. And I did say yesterday that it was all looking a little bit sketchy for longs because everybody was long, but the volatility was increasing. Implied volatility was slightly hedging, slightly going to the expanded side of things. That is not really what you want to see when you're going to get an orderly continuation move to the upside. You actually want to see implied volatility compressing a little bit, right? Because otherwise everything becomes a little more volatile and in danger of that negative gamma squeeze. So I do believe we are potentially starting to see that in the metals. We're definitely seeing that in gold. To a degree we're seeing it in silver as well. But silver looks much stronger than gold on the weekly chart. So as a comparison, this is where they can diverge. So what do we have? We have a small reaccumulation here, all-time high. Another attempt at pushing even higher, but now into the Tuesday for the week, creating a bit of a selling wick. Whereas gold, it looks pretty range-bound, doesn't it? Pretty range-bound. So we'll see what happens, but to me, I would be looking for some major levels to be broken and then to get that negative gamma squeeze to the downside. So I'm not really looking for any support to be meaningful, given the time of the year, the period in December, and also the fact that we've already broken some important levels. You know, we missed the 60 area just by a little bit. We stopped at 59.50. And there were a lot of calls up at 60. So now I'm starting to think that this whole down move was basically just dealers selling the calls to a whole bunch of retailers like us, right? And everybody going, oh my God, all-time high, let's keep buying. But if you look at how the positioning was happening and what was going on with the implied volatility, it kind of told me a different story. So I was like, I don't really fancy longing things here. So again, yesterday I waited and I waited and I waited forever. And then towards the end of the day, as it usually happens, especially on days when you have the option expiries, literally about, I don't know, maybe about 90 minutes before the options, Monday options expired, it all just started unwinding to the downside. And that hasn't really stopped much in Asia, apart from that. Shanghai taking it back the other way, the old Tom and Jerry chase that I like to call the behavior between the sessions, where, you know, New York takes it one way, Asia takes it another way, London is sometimes quiet but can take it the wrong way as well, and then the whole kind of cycle just continues. But yeah, today I would say that this is looking a little sketchy for longs. So I may want to position myself as such. So when I look at, let's focus on silver because that's going to be my focus for today. Let's get back to the intraday levels. And first things first, where is the COMEX value? I have it here as lines on the chart, but it is basically this distribution. That's what it is, the purple area. So we can even remove this. So value low is an area of interest today. So as you can see, every time they try to touch it, there was a reaction from it. So I would be saying that 58, roughly, along with that outer value low, is definitely your line in the sand for the day. The reason why I reference COMEX here is because you guys all like to trade during the New York times. So I've noticed that also COMEX value is pretty reactive even during Asia and London. But the real moves, you know, they will come after the London fix, which is at midday. We're quite a bit far away from that right now, so we don't know where that's going to be. But I would expect the London fix to bring maybe a limited reversal and then to bring us a continuation to the downside. So that is kind of my primary objective for today. On the flip side, let's say that we bust through this Asia low. We have some equal lows right under the new Asia low. So they were created yesterday during Asia. If they get taken out and then we return to Asia and we're not able to get any movement towards the ADR low, I will be looking to maybe go long. So it's not like, oh, it's definitely negative gamma, you know, we're all going short. I always like to have contingency plans. This is why I like to create longs and shorts. So typically I create 2 long theses and 2 short theses. And then I like to put them at differing points, so not all at the same level. You know, or if it goes to 58 and rejects, I go short. But if it goes over, I go long. And then doing that for 57.50, doing that for 59, that's not a very good plan because you can chop yourself up in the process, right? So I like to decide whether I'm going to be a buyer or a seller at different price points. Sometimes there's a line in the sand, of course, but for the most part, only one of the levels will be a line in the sand, whereas the rest of them will be, well, I definitely want to be a seller here, and down here, I might want to become a buyer. That way you kind of stay out of trouble, and the plans intraday generally tend to be a bit cleaner. Lenny is coughing in the background, so sorry about that. JPTPO Trader, like your username. I admire your market profile knowledge. I've traded market profile for almost 4 years. I usually trade in New York, where I'm testing the overnight session, especially London. So I'll send questions as I join when the hours allow. Yeah, please. Wallpaper me with questions. I love questions on profile. I'm a huge nerd when it comes to profiles. So, you know, yesterday I was on with Hogue and Vince for group coaching, and that was amazing because all 3 of us, I think, are big profile nerds, right? So it's nice to kind of chat to the colleagues that are all on the same page, and then you can sort of run through ideas and why you're seeing it. And now Vince and I didn't really work that much up until this last VIP season, and then we did a couple of sessions together, and it was amazing. It's like, obviously we know each other, but we didn't get a chance to share the stage very often, and it was great. Because, you know, you're just chatting about setups and, you know, the acceptances and repair and structure and everything. And you don't have to go explaining yourself. You know, you're kind of talking about pretty good concepts. I'm going to be on fast markets in the last hour today. So you may want to pop in. Because usually when it comes to trading for the major part of the day, I actually really like the London close because it's like, to me, it's the perfect time because we've had enough time to figure out what the hell they want to do. And I'm one of the traders that the longer the day goes on, I can tell with higher probability what they're trying to do. So I'm very rarely wrong towards the end of the day. Whereas in the beginning, I always felt like I don't have enough data because I'm systematic, but I also want to have situational awareness of why they should be doing something. Who's they? The dealers, the market makers. I put a lot of stock in how the options are positioned, because that is ultimately what drives the prices these days. And it's always driven price. Options expiries were always a part of what I was doing. But in the recent years, we've had better ways to track that, even intraday, as things are developing and progressing. Whereas before it was really painful. Like you'd have to like stare at the options. You had no good way to aggregate the data, and the whole thing will like take me like 2-3 hours just to figure out what they're trying to do, you know, what's net gex, what is the delta doing, what it was just a very, very laborious process. But now luckily we have services, we have companies, we have AI even that can help with those kind of outlooks. I'm not talking about AI writing your plans, because that's just, they're not there yet. But if you're, you know, looking to aggregate the data, it's like, can you tell me the levels broken by open interest, what are the calls doing versus puts, and just like a basic overview of the options chain, right? That can be done very easily these days. But yeah, so I'm thinking shorts for now, unless something changes. And again, you're allowed to change your mind. You know, it's MGI, market generated information. I say shorts from whatever I've seen yesterday and today, but obviously if they decide to suddenly push it higher, you need to have a contingency plan for that as well, which is why I like to have 2 short theses and 2 long theses. That's how I teach people as well. Never marry yourself to one bias. You can do that maybe if you're a swing trader. You can just go, well, I'm going to be short for the next 2 weeks. Great, but intraday is all about timing. And then what do you expect to happen at that time of the day? Because, you know, our stop losses that we use, even the ones that I use intraday, which are typically bigger, then they're not enough to absorb the intraday movement and whipsaws that can happen. Whereas when you're in a swing position, typically your swing position is so desensitized to intraday movement, you would really need to have some kind of a big outlier move driven by an external catalyst to actually make a dent in your whole hypothesis. You know, if you are looking at a 30-minute chart, well, now we can see we're sort of, you know, dancing around GEX3. GEX3 to me is an intraday sort of do or die. Are we going lower? Are we going higher? But then there's also the daily chart. And if I just look at the daily chart, I'll be like, okay, well, if I want to run a short, well, my stop has to go above 60, right? And it has to be quite a bit above 60, because you will be looking for a decent reversal to last you, you know, at least for a few days, maybe even a week. And you don't nitpick on stops, so your position sizes are typically smaller in relation to the account balance, and your stops are much bigger to account for the fact that you want to spend a lot of time in this position. And to me, the size of the stops are very much a reflection of how long a trader wants to stay in a trade. So if you want to stay in like for 2 minutes, sure, you can use tiny little stops, no problem. But if you're expecting a position to last you for a couple of hours, even 90 minutes, you know, 45 minutes, 90 minutes, you have to base your stops on something that is more akin to like the time frame that you're looking at, not just, you know, oh, I'm going to plow in a 10 point stop. That's great, but what is that based on? Like, what are you expecting to do with that? And some of you want to have these beautiful long trades that capture the majority of the day's trend that silver and gold both like to do, but you're never in long enough because your stops are not designed to stay in for that long. And, you know, one of the common complaints that I get from people when they first come to me, but I also have randoms DMing me going, hey, I'm always right on direction, but I'm never in long enough. And I'm like, size down, increase the size of your stop, see what happens. And then they come back 2 weeks later. Just like one, it's not even coaching. It's not coaching, it's just a suggestion. It's like, well, try this, see what happens. And I'm always, whenever I'm coaching, I'm not like, this is how it is. I say, this is my observation. But you go and test it, right? You go and see whether that's true. Don't take my word for it. This is my observation. Now you can go and see how often that happens and whether you find value in it. That is the cornerstone of, any sort of coaching in performance disciplines. You put out an abstract concept for the trader or for the athlete or whoever, or musician, whoever you're coaching, and then you give them time to figure out whether that's going to work for them. If it works for them, great. If it doesn't, they move on. Like, for example, the euro wobble on equities. That happens nearly every single day, right? So knowing not to initiate breakout trades at the time of day when the reversal, even a temporary one, can cause you a lot of grief, that could be valuable information if you know how to use it. But, Do I use ATR in stops or just market structure for the wider stops? So I personally use ASR, which is my workaround to what I'm trying to achieve. I was never happy with ATR as a measure, and I'll tell you why. Because when I'm trading through 2 different sessions, and then we get the session that is bigger, but your ATR is based on Asia and or London, which is typically quieter, what's going to happen if you want to carry over a position into COMEX? Either you're going to lose a lot of profit on a pullback, because there's going to be a pullback, nothing goes in a straight line, or you are going to lose the position because your stop is not designed to take the regular trading hours of COMEX. So what I do, this was a problem that I had back in the day, and I solved it by creating an alternate of the ATR, which is ASR. How is it different? Instead of taking the previous n number of periods, I take the previous n number of days just for that time frame. That becomes average session range, basically an average of the regular trading hours. So I take that as a benchmark, and then I divide it by a particular number that will give me a sufficiently large space in that range to run my 2, 3, 4 R's, depends on what I'm trying to achieve. But that is the formula that I have in my ProDev program, and that is what I teach people. So whenever somebody comes to me and they go, I only use, 10 points, and I'm like, well, great, but now we're sitting at a day when it's moving 1,000 points. Whereas you created that or picked that up from somebody who was maybe teaching you when this whole thing was maybe moving 200 points. Like, it's a different market structure, so you have to have a way to scale your stops. Scaling stops to the structure also matters, but I would say that for me, I would be going almost backwards. So instead of going, well, where is the high? And, how can I fit that in? And it doesn't matter if I'm, entering... Like, let's hypothesize that I want longs. I don't, right? But let's just say. So where would my stop need to be in light of the structure? Well, well below this low, okay? Not just next to it. Because intraday lows, especially if they're inside lows, I call them inside lows because they're comprised in a much bigger time frame. So for example, for this low, we still haven't taken out this low. And this one is sitting in a much larger swing. So where's the swing? All the way up here. So there's the high, there's the low. So really, ideally, where would my strong stop loss placement be? Well, it will be away from the round number and away from the most perceivable low. So that would be sub 57, 56, 70 really would be my ideal stop for longs, if I wanted longs, okay? So what does that do? So if I want to use an 85 tick stop, that's roughly, let's have a look, because silver, so that's roughly about 42 points, right? So if I wanted to enter a position that is going to have this stop at the appropriate place, and I wanted to use 42 points for my stop, where would I need to place it? Someday I'm going to remember where all of these are. There it is. So if we're going from the low, or if we're going from the good stop loss placement, so this is where I'm, topsy-turvy. So 42 points would be not before the round number of basically 57. So really, I would be looking at 57. And then I would be looking to see whether I've got something there that I can use to position myself. So I would be like, well, what are the options doing? What do we have there? Oh, we've got GAX1 there. Okay. But we're in negative gamma. Is this even valid? However, that would be my process, which is very much upside down to anybody else. They'll be like, oh, low is there, so if I go, here, then... And I'll be like, well, if I want to use a 42 tick stop and I want it away from the round number, where does that need to be? This is where I'm a bit odd, right? I don't know whether it's because I'm a lefty, because I am a left-handed person, and I just do literally everything upside down. So I start from the stop loss placement, and then look at structure, and then look at what the options are doing, and... Does that help? Hopefully. But yeah, so when I'm looking at a position, I'm like, well, I would need to get to 57. And then if we happen to run through some shorts there and then wick through them, that would be my ideal position. Obviously, I will be looking for a reaction at that area as well. So maybe my ultimate entry might be, more closer to something like this. Still below the number, but we wick through some lows, so it becomes a little bit more palatable. But my stop's still away from the round number and then going in off the reaction. Now that can come back to bite me sometimes, because if I get stuck in a range, then I take the entirety of that range, and it's not, it's not very comfortable, but I know what's happening, so it's not like, oh, I'm freaking out. It's just like, yeah, okay. So now I'm going to be in a range for a while. Cool. Risk management concepts, pretty universally a good idea. Yeah, hey, those who can give financial advice are so handicapped. That listening to people who do wise things without financial advice can be the actual best people to learn from. Financial advisors mostly buy crap from Wall Street. I wouldn't say that. I mean, financial advisors have to have a pretty... tight risk disclosures and their own track record. They're not, and if they don't have a track record, they have to disclose that, right? So then you as an investor have to decide whether you're going to get into that or not. But yeah, it's, I don't know, it's a tricky business. I've never really liked doing the whole CTA side of things. I briefly worked for an asset management firm. I thought it was going to be about trading. It wasn't. It was all about talking in meetings and, preparing sheets and more spreadsheets and presentations. And I'm like, I don't want to be doing this. It's like an office job. What are we doing? Whereas to me, trading and finding alpha and, I want that nerdy side of things. And, granted, I've got to an age where I'm kind of slowing down. I'm not really after anything anymore. I'm just like getting to the point where, I'm gonna make a little bit of cash trading. It's pretty fun. Anything else is just irrelevant. So I've never had sort of illusions of, let's come up with a hedge fund. That never even crossed my mind, because to me that's a whole bunch of admin. It's a whole bunch of, especially after my experience as a trader going into a firm that had that asset management aspect. It was just horrible. I didn't like it at all. They had the dress code. I had to change my hair color. That's where I couldn't have my screaming pink anymore. Whereas in proper firms, nobody cares, right? You go in with like screaming rock and roll hair and tattoos all over the place. They don't care. But in, some more dress codey environments, oh yeah, they care. They're like, you can't. But I'm like, I'm not client facing. Who cares what color is my hair? And they're like, yeah, there's a dress code. Need to read it. I'm like, okay. I also had my eyebrow pierced at one point. If you look really closely, you could probably still see the scar there, but obviously I had to take that out. So yeah, had to change my whole identity, and I didn't like it. So I'm like, I'm not doing this. I'm going to go back to cowboy trading. So here we are on TopstepTV. But yeah, I enjoy prop more than any sort of... So yeah, I would agree that people who who are just doing this because they like what they do, and they're not doing it for the benefit of getting more investors and stuff, I would say that they will probably give you more truthful advice. Not to say that CTAs don't know what they're doing, they do. But it's generally more like longer term plays, it's more swing trading. Whereas intraday trading is, to me, kind of fun, it's difficult. That's a part of the challenge. But it's fun, it's fun. It's like, oh, let's get a small stop loss and try and get 2R out of this. But at the same time, I'm not somebody who wants trading all day, every day to take over my life. I did that when I was younger, right? And even then, I didn't trade all day, which was a challenge in itself. Because, if you're sitting in an office where you're expected to do something all day, and then you end up most of the day just chatting by the coffee machine, going to the gym, then going to lunchtime, then sitting there, doing other things, then chatting some more, and then it's like, oh right, okay, it's time for my setup to come. Yeah, let me look at the charts. It gets difficult, Nowadays we're all remote, so that brings challenges in its own right. But it's better because you can manage your time however you like, right? You can trade just for the time of day when you know that you perform the best. How do we do that? You look at your stats, right? So with the risk management side of things, I always want to say to people that you have two risks. You have market risk. How much is this product moving? And then on the other side, you have your own risk per trade, per day, all of that good stuff. So I think most people in retail forget the market risk part. They just see something moving a lot. And they're like, wow, this moves so quickly. It's like, yeah, but it's very, very wide risk. And it's just I'm surprised. I think that these days we have bizarrely less knowledge than we did 10, 15 years ago. And I think it's because the prop firms online have just exploded completely. So everybody started turning to day trading. And that leads to lack of delayed gratification. Everybody's blaming it on discipline. I don't think it's discipline at all. I think it's information asymmetry, quite frankly. Because if it was discipline, how is it that somebody working for an institution who's equally undisciplined as some of the people in our industry, right? They can be overweight. They can be total mess ups. They can be going through divorces. They can have 3 marriages behind them. They could have a substance abuse problem. They could have a drinking problem, and yet they're crushing it, right? So it's like, it's not a discipline problem, is it? And I truly believe that it is an information asymmetry problem, where we're looking at FVGs and charts, which are valuable as a result of the aftermath of whatever the institutions are doing behind the scenes. But if you're looking at things like gamma exposure, what is the ratio between calls and puts? Where are those GEX levels in the first place? Where's let's start it again. Where is the distribution curve? It's the start of day today. What did the auction do yesterday? Do we have any major GEX levels or calls and supports that, call walls and put walls that have been broken or they held? Does that change how the institutional positioning is looking today? And I think that's the missing piece, definitely. So, take it as you will. But, for me, everybody's like, Dee, do a trade. It's like, slow down, cowboy, let's breathe for a second. If there is a trade opportunity, I'll take it. If there's none, I'm not going to take it. So yeah. By the way, guys, we're almost 193,000 subscribers. Can you believe that? Can you believe that? That's crazy. When we started TopstepTV, I joined like the second week that they started. We were at like barely 20K. So anyways, let's, should we push this to 193? Yeah. So let's get your dog to sign up. Get your mom to sign up. Your grandmother. Your neighbor. Tell everybody to sign up to TopstepTV. Let's push this to like 200K. Never mind 193. It's just absolutely amazing. Hey, I like cowboys, man. I think we're all good. Yeah. Trading Nickel says, to be clear, around now is morning for me, New York. I mostly stay away from early Asia, what a lot of people call low liquidity trading is my specialty. Right. So more range then? I know you've been here for a long time because I've seen you everywhere. And depends on your style. Some people are going to love the low liquidity. I'm somewhere in between. I'm not really a huge fan of low liquidity, I'm going to be honest. But I do quite like orderly movement. So to me, prime time is either sort of those 90 minutes as the LME, for metals in particular. For energies, not so much. But metals, as LME opens, you have that time right before COMEX and after the London fix. So it's like roughly about a 90-minute period where I really love the price action there. It's got enough oomph in it, but it's not super crazy. And it can give me either a position for a larger swing or a very smooth shorter-term trade. Now, for me, a shorter-term trade would be 30 to 45 minutes. Whereas if I'm looking for something bigger to unwind, I would be looking to position myself somewhere at the top of a relevant area. Like, for example, today, that would be near this outer value low edge. So somewhere around 58, between 58 and let's make it really wide, 58.50. So that would be the ideal area for me to kind of go into swing shorts. I mean, could it go higher? Yes. But it would change the context of what they're trying to do, because then we would be chasing 59, and then if we break 59, well, what's to stop them from tagging 60? And then the whole thesis changes. So this is where the line in the sand idea comes from. But if we manage to maintain the outside of value sentiment, so below value today, below this GEX2 that was broken overnight, they really tried. I mean, look, they tried to go higher. But as soon as they got over it, somebody stepped in. So now we're seeing this pattern developing where we're always struggling to get above 58, which makes me think that 58 is a pretty important level. So what's the next level? Well, 57 would be the next one. And then bizarrely, 56 is a call wall, but I don't really see it as that strong today. It would be a great target if we get there. But yeah, I wouldn't necessarily expect it to stop at a call wall if it's a true negative gamma squeeze, because that can get very ugly, especially for this time of the year. Trading Nickel says, subs who don't watch are invaluable. I appreciate the humor. Spend years working on marketing and learning what works on YouTube. I thought I knew what works on YouTube, and then the shorts came along. So, I signed up to YouTube in 2015. That's when my first video was done, sometime in September 2015. And then I sort of didn't really do much until COVID came, when I was in lockdown, in quarantine, bored, uncertain of what was going to happen with my current prop job at the time. And it was a weird time for sure. Right, we are kind of trying to break this again. Let's get some time and sales on the rest. I'm going to use a big contract here, and I'm just going to do this just to see what the big boys might want to do. Let's have a look at all of them. I mean, there's still a few buyers here. They're not big. I want to see some institutions stepping in here. And I'm also going to put the big silver, because a dome on the micro silver means absolutely nothing. Interesting. So we have a localized high on the 5-minute chart that could be used as more of a scalp, I suppose. But yeah, let's see if we can get somebody with more than one lot actually stepping in. So this guy is buying. And yeah, I've got a bookmap on the other side. So let's wait and see. You know, Gex 3 could be supportive here as well. They can shoot back up to Gex 2, where there's also the value area. But frankly, I would like to see a breakdown of that at some point. I'm not seeing it though. Nobody's really initiating anything here yet, unfortunately. Okay, it's too early in the day. Let's wait for another minute 20 to see what the 5-minute time frame wants to do. How do you use volume? Yeah, it's that's a bit of a loaded question. So volume is a whole concept in and of itself, right? So I was never, like, and I wouldn't say to myself, oh yeah, you know, a big volume trader. I just use volume as a supportive factor. I don't use it as a defining decision. I use it as like, exhaustion. All right, so maybe this Asia high or Asia low can be a reversal point, you know, but it's not because of the exhaustion volume. It's because we have Asia high and low there. So it's only a supportive factor. If I'm looking for a move that's going to break out of an area and go into a trend day, I would then like to see steady volume, not patchy volume. So not going like one 5-minute bar is red, then another one is green, then another one is red. I want to see two things: steady increases of the, let's say you look at a 5-minute chart, steady increase from the bottom of the range towards the other side, because that momentum is it needs to grow from the opposite side of the area before it kind of breaks. And you know, okay, so it's going down. Let's try just a little one here. And you know, I am going to be on fast markets. I did do a similar trade in the new XFA, so I'm trying to get that off the ground. We'll see how it's going to work. Sometimes XFAs, getting them off the ground, it gets a little difficult, especially if the first sort of 2-3 days don't go particularly well. But yeah, we'll see. And then I've got another three combines that I'm working on, so we'll see if we can flip those back into a live again on the new dashboard this time. But yeah, it's a bit annoying, frankly, but it is what it is. I do love the new dashboard though. I haven't had much chance to look at it before I started switching over, and I haven't done a payout yet from there, so that'll be an interesting experience. Because people keep asking me, oh, you know, payouts on the new dashboard. I'm like, I don't know. I'm still legacy. It's like I'm all legacy, all old school, you know. Do you guys know that I was the first Topstep X live account? That was a riot. if you think you have bugs now, can you imagine how it was back then, like 2 years ago? That was interesting. Yeah, now we've got some issues, but nothing like they had in the beginning. So this is all just child's play. Still, I agree. Still not great, so don't come after me. I agree. I know. But growing pains. Just notice that every time they do something that brings like either back to funded or now no activation accounts, it crashes the platform. That should tell you something. And yes, I agree the service should be stronger to take more load and all of that. I agree. Don't come after me. It's not my platform. But it's clean, It's a clean platform. Can it be improved? Always. Where are those equal lows? I'm just gonna find them. There they are. So I'm just gonna put my profit just underneath those. And let's see if we can break this GEX. Certainly causing a little bit of trouble here, but not too bad. Very patchy. Very patchy. Well, we've got a bit of attraction. So what we need now is for the price action to stay below GEX3. If it whips back above it, I don't want to be in this. And it can happen during this time of the day because London is not very well known for smooth movement. It's known by wicking and then getting stuck in a range. So that could happen. It could be at the bottom of the range here. I'm pretty aware of that. Thank you. But at the same time, I also want them to hunt the lows because we haven't really had a good recovery. Every time we smacked into GEX2, it basically didn't allow the price to go much higher. And now we have GEX3 and we're trying to break through it. So one hypothesis is we go slightly below it, come back, keep running into it, which would be a bit painful. But another option is that we bleed through the Asia low, then ping back after it hits those equal lows that are very nice for intraday profits. So instead of people placing their stops, I'm placing my profit. So, somebody's going to be going long and then placing their stop exactly there. And I'm like, you know what? It's a great area to take somebody's stops. Evil D. It's just a matter of, trying to see how, and it's not ideal, but try to see how an uneducated trader would look at the market and you trying to do something that is educated and, taking their cash. Is it evil? I don't know. But hey, I've been called evil my entire life because I'm left-handed. My own grandfather told me that I'm the devil's spawn because I'm a left-handed person when I was 4 years old. So that was lovely. So I don't mind being called the devil's spawn. It's pretty much been my identity. Just joking for anyone who's like, yeah, D is definitely evil. It's just a joke. What is it, Manny? Why are we moaning? What is it? What do you want? What? Manny communicates in that. What? Tell me. Want to come say hi? Peter says, I'm on track to pass my combine. Come here. There we go. Ah, catching you. I'm catching you. I caught you. It's alright. I caught you. Yes, I know I've got some sweet potatoes there. Is that what you're after? No, that's going to be my breakfast later. Yeah. Peter has a good question. I'm on track to pass my combine this week, fingers crossed. Any tips for a newly funded trader? Take it slow. So change your objectives from I need to get to a payout to okay, I need to hold on to the XFA longer than 2.5 seconds. So when you adjust your expectations and just expect that maybe that first week is not going to go well, try to do everything in your power to make any kind of resulting hole potential as less of a hole, as less deep of a hole as possible. So instead of digging a $1,000 hole in the first day, try to put a daily loss limit, trade with 1 micro, because the first couple of weeks of the XFA, I would say it's all about just adjusting to the new higher pressure, no going back, or going back at a cost of time, because you've slugged it out in a combine, and then to blow it in like 2 days, it's a blow to the heart, really, because now you're like, well, I can either pay an arm and a leg for a back to funded option, or I have to go back to a combine and slog it out all over again. Neither is the most ideal. What? Do you want to go and bark as well? Well, now you're here. Now we're snuggling and cuddling. So you're going to have to contend with me here. Okay? So yeah, so just take it slow, take a breath. When people come to me for training, I even tell them to, if it's their very first XFA, they've never been funded before, I even tell them to leave it alone for a couple of weeks, just to get that dopamine rush from, oh my God, I'm a funded trader now, it's amazing, right? To kind of pipe down a bit, because that's something that will increase your productivity and motivation, and how that's great for any other industry, but for trading specifically, extra productivity and motivation nearly uniformly leads to overtrading, because you feel the urge. You're like, I want to trade that account. So we've had people who pass, and then Globex on a Sunday opens, and they're like in with 15 NQs 1 minute after Globex opens, 3 seconds after Globex opens, and they're like, yes, and then they blow it. Like literally in minutes. In minutes. It's like, what is the point? So just imagine that this is the only account that you can have. And how would you treat it then? Would you treat it with lack of respect? Because there is a reset, and there is a back to funded option, and there, you can always try again. Or would you do everything in your power to maintain it, to caress it, to cuddle it? Wine it and dine it, Get to the third date. So yeah, just slow down. That's the only thing I can say. Adjust expectations and slow down. Let's see. Let's have a look at chat. Drop straight says I got 1 more XFA to get for 5, so not sure if I want a live account. I mean, there are definitely there are definite pros and cons being live. Okay, so 1 account only. You can't, if I'm trading through several sessions, that means that I'm not able to partial it into different accounts. So everything has to go into sort of the same assigned daily loss limit. And, even on my personal side, I do have separate accounts, some of them in separate currencies, to account for, separate uses. DAX trading, for example, or having 1 account for the London session, another account for the middle of the day, there may be a third one for the end of the day, or different markets. I trade different markets. I have energies, I have metals, and towards the end of the day on CME products, I will pop in an equities trade on some days, not every day, but All right, so GEX3 is still being reactive. So we're going to be stuck in a range here. And quite possibly go back to 58. So again, London, very annoying for me. Especially before any kind of London fix. Now, London fix on gold is coming up in 4 minutes, but there is no such thing on copper. London fix on copper is coming up. Okay, Manny is bored of me. Okay, Manny, all right. Let's see how it's going to be. Silver fix is at midday. We're going to get the first fix on gold in a few. And I have a massive scratch on my arm. Thank you, Manny. That was very considerate of you. You gave me a big, big scratch. Alright, so we'll see. We'll see what happens here. Are silver and gold correlated? Well, kind of. There was a big drop in correlation at the London Open. Now they're pretty much back in sync, but we'll see. So yeah, maybe 58 should be the short area. Again, me going for a breakout trade in London was a possibility, purely because we've had no real recovery. And this could still work, you know, it could still work, but GX3 does seem to be causing a bit of trouble at the moment. And I've massively reduced the stop that I'm using here as well. And the target, for that matter, as well. Trade attainment, yeah. Let's see. How common is it for GC to extend the IB during the London session? It's fairly common, but what's not common is for it to stay below the London session. So typically after the fix, so after about 4 minutes, it starts to ping back. But a lot of the times in between London Open and sort of midday, it gets stuck in a range. So that's like statistically the highest probability for GC for this time of day, even with the fix that's coming, the first fix of the day for gold. I personally don't like trading gold this time of day. I think it's very fickle probabilities wise, because I like probabilities. So if I can't make something repeatable day in, day out, and it's not happening at the same rate day in, day out, it's not a viable strategy. So if something is only going to happen once in a blue moon, not great. But if it helps, GC has actually hit my average session range low, which is slightly ahead of the ADR low. So ASR low sitting at 4212.5. We've already wicked down into it. Strangely, we also have Asia low there, so we could get a little reversal here. This was, let's see what's happening on the low time frame. I mean, can we call this an exhaustion candle? Yes. Do I like the fact that we're not really above this price after the little sweep? No, because this is actually weakness. You want to see prices going higher, not lower. So we had the fix. So where are we? Let's mark the fix as well. So this is the fix open of this candle. And you can have a sharp reversal from any sort of fixed price. But today, again, I would be looking for continuations. I wouldn't be looking for anything else. So this is 10:30 a.m. GC fix. Then you have another one at 3 p.m. So that's the second fix. And that one lines up with the option expiry in currencies. So it kind of has this double whammy effect on gold. Doesn't have the same effect on silver, because there's different mechanics at play. Silver only gets a fix once a day, midday London time, that's it. So I sort of like to use the London fix as a benchmark of sorts. Amazon man, of course. 7 is going berserk. I call her the Borg, because 7 of 9 is her full name. Like a good little nerd that I am. So yeah, so I have big watchdog. Big watchdog. She doesn't like the Amazon man. Especially if she's outside and she sees the van pulling up to the driveway. And she's funny because she barks, she makes herself, trying to make herself look bigger, and she's a black and tan cattle pom. She's only about this big. And so not the smallest, but not exactly a toy dog, but not exactly a medium dog either, right? But she tries to make herself look really big. It's like, she puts her paws like sideways, like she's a bulldog or something. And I'm like, you still look ridiculous, man. No one's afraid of you. All right, let's see what this top of the range wants to do. With the current correlation, obviously if we get some strength in gold, then silver is going to follow that as well with the upside, in which case this is not going to be valid. But if we break down below the fix and below the Asia low, because this whole reversal has been very lackluster, then it should pull silver back down with it as well. That's the correlations. And usually they correlate pretty strongly, but sometimes you will see them not correlate at all. Like yesterday, silver went into slight negative correlation. Because they are different commodities, right? So they're not twinsies. They're not derived from one another. They're two precious metals in their own right. And yes, they're similar, with similar delivery requirements, but not quite the same. So we'll see. Let's see if we can get that breakdown at some point today. At this moment, it has extended 200% of the initial balance. I guess that's not normal. Well, I think you're looking at it in a slightly skewed way. So the way I'm looking at this is that the initial balance for gold is, let's say, slightly smaller than, although I don't know whether it's smaller. It's maybe only a touch smaller. Because usually we get about 150, 170 ticks anyway. So the size of the initial balance is something that you can use to figure out a day type. So the day type we're experiencing right now on gold is a normal variation day, where the price extends at least double the amount of the initial balance size, whatever that size is on the day. That is a mutable, right? So it changes. It's subject to change every day. Yes, there is the normal size of the initial balance, and I use my ASR measure to see whether we're normal, small, or very wide. And then depending on that piece of information, I will then formulate my other ideas of how the day should be. So if you have a smaller than average initial balance, you can get a very good breakout, but you can also get stuck in a range-bound day, because in a small initial balance is not always an indicator of a big trending day. Today, because of the time of the year and how the options chain is positioned, the small initial balance brought us the breakout, but it's unusual to see that level of breakout during London. Usually we are pretty range-bound. We don't even break out of the IB until much, much later. But today we're well below it, and we've gone into a normal variation day for the London session, hitting the average session range low, but still not hitting the average daily range low, which is actually slightly lower. I'm going to give you the exact number here, 42.068. So I wasn't too far off with my ballpark. But the ASR low was already at 42.12.5. So now we're trying to turn around, but it's struggling. I mean, whenever I get these smashes below the Asia low, I really want to see initiation pretty much immediately after. So what do I want to see? Well, let's call them FVGs, if you will. So I want to see a strong bullish candle that takes out at least 3 previous trending candles on low time frames. Now, I like a 2-minute chart for that purpose. So when we did that, it was all very lackluster, right? It was all just like, yeah, it still may reverse. Look, it still may reverse, but just by the way that I'm looking at the previous reversals that have worked for me, they don't typically look like this. This is more a sign that we're going to get a little bit like ambling around, and then it's going to continue lower. But we do have average session range low, and we do have the Asia low as a potential maybe for a little bit of a pullback the other way. Is it going to be a full-on pullback through the 75% of Asia range? Probably not. So in that regard, this is all still looking quite bearish to me. But is it normal for London to extend this much? Depends on the context. Generally, no. But by the same token, we can't really say that this was an extension of 200%, past IB, because it's like, yes, technically it's true. However, we're still within the day's range, so nothing outliery is happening just yet. It's just a slightly more livelier London session than usual. Let's put it that way. And that is very likely. Like, remember that yesterday we had the weekly expiries for Monday, and then we also have a Friday weekly expiry as well. So on the options side. So that's definitely something to look out for. That a day after, if they start to like unwind positions and stuff, it's going to happen more often than not after those options either expire worthless or they are in the money. Depends on the context again. And then you will see these outlier moves that tend to happen in and around those events. So it's not really random. But yeah, I'm going to get out of this because I'm not really liking it. And I'm going to wait until GEX2 arrives. And maybe just wait for a better time of day. Because again, London and metals trading really not something that I excel in, unfortunately. If you've been here for long enough, you know that these were supposed to be DAX trades, which is why it's called the Euro trade. Eurex, Euro. But then DAX, they had trouble integrating it into the feed that is in USD, and then we have euros per tick. So for some reason that's a huge problem. But yeah, so we never got DAX. So here we are 18 months later, staring at metals when the metals don't generally move. It's not to say that there aren't opportunities, maybe for like range-bound traders. It's just that I'm not a range-bound trader. On most days. I will be, I will get involved in a range if that's the only thing I've got on the day. But I just find that better trades in metals come closer to the LME open and into the London fix. And then you get these like nice smooth moves that don't take up a lot of mental capital. But yeah, it is what it is. It's just the nature of the beast. So not impossible. Sometimes you get beautiful sort of smashes into Asia low and then a reversal. Not very often, but when they happen, they're pretty sweet. Benjamin says there's an iceberg seller. He keeps pushing price up, eating up the orders, and pushing it back down. So I'm spot on. Yeah, this is the beauty of Bookmap, right? You can see them. Like if you have a whole bunch of buy orders, and you have a decent amount of volume, but the price is not going higher, there is a larger seller there doing something that is absorbing all of those buyers. And then at some point, even if you get a little bit of a squiggle upside, but it's not like a committed move where you see real volume congruent with the price movement. Every time you see a divergence between those two, that's always a sign that there's something going on behind the scenes that maybe you shouldn't ignore. And you can't see that on a regular price chart. I'm sorry, but you can't. You can see it as an aftermath, maybe if you get like a selling wick, but that's too late. Like it's already happened. Whereas if you're staring at tape and staring at Bookmap, you can see it happening. You could literally see a buyer stepping in and another seller going, no, and it keeps like smashing it down with a few orders that are always of like similar size, slightly bigger, but not too big, not to scare the market. It's just keeping it down, and they can be wrong too. That's the interesting part. They can run out of cash flow, right? So this iceberg seller, he can run out of cash flow as well. Then the money is not infinite, right? Even for the market makers. So they can keep selling and keep selling and keep selling, and the buyers keep trying and keep trying and keep trying, and he will absorb the orders on his opposite side up to a point. But then if he stops what he's doing, he stops selling, the buyers can take over again. So they can be wrong too. It's not like 100%. We always say nothing is ever 100%. So yeah. Do I use yesterday low and high as levels as well? It reverted it yesterday low. So here's my problem with that. On TradingView and on TopstepX, you have a reference of yesterday's low being what? Starting when? So if the Asia created a low, but let's say you had the low that happened slightly before slightly before Tokyo opens. What's the low? And then if you have platforms to track things in GMT, the Globex low won't even be included in that. So what is yesterday's low? Here's where I nerd out completely. When you're doing coding, you have to be super clear of how you will define yesterday's high and low. Is it by the session? Is it by the overall candle? And when did we start tracking the candle? So if GMT new day is GMT midnight, is then the yesterday low 11 p.m.? So that's the kind of stuff that I think about. So I'm always doubting the validity of what is yesterday. Like if it's very obvious, if it happened, let's say during COMEX and we wicked up higher or lower and that remained the low outside of those interesting points. But the problem becomes when we are mixing in those Globex lows and it's like, which one is it, right? Should I take the one that was created before the day started for me, technically? Or should we take the one that was created during the actual regular trading hours? So yeah, some days it's not ambiguous, right? Some days it's clear where was the high and low because it's far away from everything. But on some other days, if it happens during Asia, it's very tricky to figure that out. So for me, I don't like the wishy-washiness of that. So personally, I will look at that. But no, I will not take the day's high, previous day high and low. I will take the average over the day high and low and implied volatility, minimum and maximum for the day. So in a way, I would look for those to be taken before I do anything with them if I have a statistical quantitative measure outside of that area. So let's say that we had on this chart, right, yesterday's low. Let's make that bigger. Let's get rid of some of this stuff. So let's say we had yesterday's low on this time frame. There it is. How did the price react today? So that's the low, yesterday's low on the daily chart on TopstepX, right? How did we react? Let's go to the 30-minute. So was that it? That was yesterday's low, right? It wicked through it, so it was a liquidity point. Could you have run a trade off of it? To me, silver looked more sane than this. So yeah, I did run something similar, but I don't think it was yesterday's low. Was it a swing trade opportunity? No. Was it a scalp opportunity? Yes. Was it any good for me? No, because I'm not a scalper, so I want bigger opportunities. So unless this actually went into a good trend upside, to me this was just like a crappy little sweep and then went nowhere. Does that make sense? I don't know. So yeah, for me, I don't know. I've never really resonated with that. I am aware of where they are. You know, I know where we were. But do I use them as like, it's a part of my approach? Not really. No. Not to say that other people won't find it useful. It's just the way that I'm trading, I really need opportunities that have more profit margin inherently comprised inside of them, smooshed into them. And, you know, previous days' highs and lows, if they are the ultimate highs and lows in a swing, I may consider them. But again, I would like to see them taken out and then reversed, more likely. And again, that's contextual. So if we're going up and something makes an all-time high, then we take it out and then start to revert back into the range. That will be, for me, an opportunity for an intraday short. But I'm not going to aggressively hold it all the way down because we're against the trend. But let's say that we establish an accumulation like we have on gold right now on the daily chart. So let's hypothesize, right? Let's go to the weekly, actually, because weekly is, I think, more useful. And let's say that we get down to the bottom of the range. So where's the bottom of the range? Well, you can say that it's somewhere around this area where the opens and closes are happening. And then you have the ultimate low. So let's say that we go to the ultimate low and takes it out. What am I going to do? I will be long, potentially. Why? Because we have a big, big move. This is a swing in its own right because it's such a big time frame. Can it break down? Yes. Is there anything geopolitically happening that is so hunky-dory in the world that we're not even worried about things at all? No, things are very difficult in the world, so I would expect more longs from a macro side. Therefore, I would be looking for longs after we sweep the range low, right? Because this is not a good demand area. It's too high up in the distribution curve. This one is better. So this one I would not be looking for a total takeout of the lows. I would be looking for my conterminous line to be touched and then to react. But this one, this high up, intraday speaking, this low is an opportunity for an intraday long. But looking at it from a bird's eye view, if we get near the middle of that range and I can find a level to run a swing on, after my little intraday long, maybe the next day, I may have the opportunity to run a breakdown of this entire structure to the downside at some point, if the market conditions are also speaking about that side of the story. They're not at the moment, are they? But, we'll see. So it's very contextual. But am I aware of where the previous day's high is and low are located? Yeah. Do I use them? I suppose the answer would be sometimes. I know it's not what you want to hear. But to me, distribution curve location, ADR, ASR, and GEX levels positioning on the day, much more important than where we created a high or a low yesterday. Personally. Again, doesn't mean I'm right. It's just how I see the markets. I don't find it particularly useful. If you find it useful, continue to use it. 1,000 ways to do this. Do I do any fitness content? Well, I used to, but unfortunately I am chronically ill as a result of a vaccine injury that I suffered literally 4 years ago. It's coming up to 16th of December. So no, I'm not able to exercise, unfortunately. I used to be a bodybuilder before then, so it's not ideal. But life happens, and you just have to roll with the punches sometimes, and that's exactly what I've been doing for the last 3.5 years in particular. So sadly, no fitness content from me. My dog stole my chair. Yeah, mine too, and then scratched me. Somebody said, Trey Nichols is saying to drop trades. My buddy is regretting not buying silver on credit before this run up, but as a principle, going into debt to invest is definitely an oxymoron. Yeah, I would agree with that stance. Please don't trade with money you can't afford to lose. That comes back to that disclaimer that we keep posting in the beginning. Yeah, it's not a good thing to just trade with money you have, you know. And the funniest thing about retail investors is like, you hear this about .com always. Oh man, if I only invested in Apple. Were you investing at the time? And the large answer that, by majority of votes is going to be no. I was not even looking to invest. Sorry, my Lenny is coughing here. He's got a heart scan on Thursday. Oh yeah, I should probably tell you, I won't be here on Thursday because I'm taking Lenny for the scan. He is my oldest doggy. He is the dog daddy to all the puppies. But he is over 13 and he's a King Charles Cavalier and he's got MVD like the majority of the Cavaliers. He was heart clear up to 10 years of age, so that's good. But now we're getting to a point where medications probably need to be adjusted. He had some sort of an episode on Saturday, which is why I'm all a bit loopy this week. But yeah, he's doing okay. He's not on his deathbed just yet. But we do need to have a look at what's going on and possibly adjust medications. And if it's meant to be, he'll get stronger again. If not, well, he's had a great life, which is sad, but it is how it is. So that's something I'm dealing with these days. But yeah. So I'm sorry for the coughing in the background. That's what I'm trying to say. Drop straight. So I'm going to show you a comment. I actually like that because I found that to be true as well. So you know how you shake somebody's hand and they're all like limp? I hate that. I cannot stand people who are just like limp handshakes. I was taught by everybody in my life that you need to have like a firm handshake. And my grandfather was really horrible for that. He would literally crush my hand even when I was a kid. Like, he wasn't a very nice man. At least when you're shaking hands with a child, you kind of assume that they're not going to have a particularly firm handshake. But if you're shaking hands with a 20-year-old, they're grown people, right? So they should have a firm handshake. And yet, some of the new generations, they're all like limp handshakes. And yeah. Bruno is asking me, is it cancelled or moved to Friday? I'm not sure yet. I will have to have a look at the schedule. I'm totally up for doing a Friday stream instead of the Thursday stream as well. But I'm still waiting to hear. I have to look at the schedule though, Bruno. So I'll let you know. Yeah, always a firm handshake. Exactly. It's like, what is this like limp? And everybody's offended about everything. Like, you can't crack a joke anymore. Like, I had somebody post some weird comment on my page on my bookmap settings, which I just showed my bookmap settings video. And yeah, the title is a bit clickbaity, but that's what YouTube wants these days, right? Clickbait titles. And they were really like, I don't know whether they don't know who I am or what, but they were like, yeah, I see you're promoting blowing up XFAs. It's like, that's exactly what I'm not promoting, dude. But yeah, okay, carry on. And then he just carried on and on and on into this like rather long essay about all the stuff that I'm not doing and him kind of attaching, I don't even know what. So I blocked them from my channel. That's... it's my channel. I can do whatever the F I want. So yeah, if you're mean and you're talking out of your behind anywhere, the only thing that's going to get you, if you're interacting with me, is a block, because I don't have time for that. Like, I really don't. Like, I don't care. there's other things in life than a random person on the internet thinking they know anything about you. So don't get upset, you know. We had a little spat in the between the two VIPs as well. And I'm just like, who cares? Just who cares? All right, guys, I'm going to finish the stream here. I don't think I'm going to get another trade here. I'm going to wait to see what happens at 58 later on into the London fix. But yeah, unfortunately, gold and silver are diverging quite a bit. So if you look at how this dive has happened, I still think gold and silver are both in for a bit of an unwinding day today. I'm sorry, I'm laughing. My husband is trying to control Crichton outside of my office. And he's going, shh, be quiet, stop it. And all that happened is that Lenny scratched on the door and he's deaf. So Crichton then feels the need to tell us that it's like, Crichton, I can hear it. He's the one who can't hear. Dogs are just really funny. They want to help, but they just get it so wrong sometimes, bless them. Yeah, so anyways, I still think we're in for an unwinding day. Where that's going to happen exactly, I don't know. But yeah, I will be on for the final hour of fast markets today. Probably trading the new XFA. So let's try and get that one off the ground. And then in the meantime, I'm going to work on these other ones as we move into this new dashboard business. So yeah, join me then, and I will see you again tomorrow, but then not on Thursday. However, keep your eyes peeled to see whether I am going to be doing a replacement stream on Friday. I don't know at this point, okay? So I will get in touch with our producer, our lovely Danielle, and then we're going to know a little bit more. That's all from me. You have the levels, you have the intention, and you have the plan for the day. And the price points that I'm looking at, they're going to stay the same as I get into the later part of the day. Until then, don't overtrade. It's only Tuesday. There will be plenty of opportunities in metals later on today. You haven't missed anything, so breathe and try to keep it together, right? This was the Euro Trade on TopstepTV. I'm Marcus D, and I will see you a little bit later. Take care.